Another week and another IPO. And this time, it is not just 1 or 2 IPOs, but 4 IPOs together on the same date, that is between 4th August to 6th August. So those of you who don't get IPO allotment would have higher chances of allotment this time, as hopefully people would get divided between the IPOs. Now, which companies are available for IPO? It's Devyani International, Krsnaa Diagnostic, Tiles, and Windlass Biotech Limited. Devyani International is in the business of QSR chain, that is quick service restaurant, with brands like Pizza Hut, KFC, and Costa Coffee. Krsnaa Diagnostic is in the business of diagnostic services. Tiles is in the business of tiles manufacturing. And Windlass Biotech is in the business of contract manufacturing for pharma companies. Now, it was really difficult to analyze all 4 IPOs. Hence, I shortlisted 2 IPOs for analysis, which is based on the market size and IPO size. So, Devyani International is the biggest IPO among all these 4 IPOs, and its IPO size is 1,838 crore. Second biggest IPO is from Krsnaa Diagnostic with IPO size of rupees 1,213 crore. Remaining IPO of Tiles is for 161 crore and Windlass Biotech is for 401 crore. So I decided to review the top 2 IPOs of Devyani International and Krsnaa Diagnostic. Hello friends, my name is Sahil and this is my Personal Finance Academy, where I explain everything about money management in layman's language. Devyani International and Krsnaa Diagnostic are perfect example of how the health ecosystem operates. First, people would eat the junk food from Pizza Hut and KFC of Devyani International, and then they would get obese and would have multiple lifestyle diseases. This would result in people getting their health checkup from diagnostic services of Krsnaa Diagnostic. So both companies would earn money. Well, this was on a lighter note. I hope you all stay fit and fine. So we'll quickly review both the companies one by one, where we'll understand their business, key strength, future growth, key risk, financials, and then IPO details. Finally, we will compare both the IPOs and I will suggest which IPO is looking better and where I will put my money. By the way, I am also going to publish the video on my stock portfolio on 8th August for paid members. I will share the details at the end. Alright, let's get started with the IPO review. Established in 1991, Devyani International is the largest franchisee of Yum Brands in India. Yum Brands is a US-based company with 50,000 restaurants in more than 150 countries of the world. They own the chains of Pizza Hut, KFC, Taco Bell, and The Habit Burger. So Devyani International is a QSR chain with largest franchisee of Yum Brands in India, with 655 stores across 155 cities in India as of 31st March 2021. Devyani International started its partnership with Yum Brands in 1997, where it started its first Pizza Hut store in Jaipur. This franchisee is a non-exclusive basis. If you look at the business of Devyani International, it has 3 verticals: KFC, Pizza Hut, and Costa Coffee, which are referred to as core brands. It also owns other brands like Wango and Food Street. However, more than 90% revenue of Devyani International is from its core brands. If you look at the promoters, Mr. Ravikant Jaipuria is one of the promoters of the company who has got over 3 decades of experience in food and beverage industry. Mr. Virag Joshi is the president and CEO of the company, who is one of the key persons behind the growth of Devyani International in the past 19 years. If you look at the competitors, Devyani International has a strong competition from various categories that operate in food and beverage industry in India. First of all, it has strong competition from QSR chains like Jubilant Foodwork, which is the franchisee of Domino's India. Then next competition is from Burger King in India. Then it has competition from Westlife Development that operates the chain of McDonald's. Then it has competition from restaurant aggregators like Zomato and Swiggy. Finally, it has competition from this new age cloud kitchen companies and local restaurants and fast food joints in the country. So clearly, there is a very strong competition. The major risk is store shutdown due to COVID. If there is a third wave of COVID, then it might result in closure of stores and would impact the business of the company. Next risk is business agreement risk. So Devyani International has an agreement with Yum Foods under which there is an obligation on Devyani International to open a fixed set of stores every year. In case a company is not able to meet the store opening criteria, it could also result in termination of its contract. Previously, the company was unable to meet the minimum store opening target and was given the extension. Most importantly, there is a competition risk. If you look at the future growth, due to factors like busy lifestyle and increasing usage of internet and smartphone, people like to order food online. Then, due to rise in income level, people now like to go out frequently with friends and family outing. Moreover, people have become brand conscious and like to visit branded food outlets. Also, there is a huge shift in taste preference and the younger generation is increasingly preferring fast food like burger and pizza. Hence, there would be growing demand for QSR chains like Pizza Hut, KFC, Costa Coffee, etc. Devyani International core brands store have grown from 469 store in March 19 to 605 store by March 21 at a CAGR of 13.58%. In the last 6 months of FY21, despite COVID, company has opened 109 stores for its core brand. If you look at the breakup, KFC is the fastest growing chain with total store almost doubled from 134 to 264. Pizza Hut has been more or less stagnant. Costa Coffee has to reduce its stores from 67 to 44. So overall, there is a good growth in the KFC business. Company has a very high gross margin of around 70% for its core brand. If you look at the financials, its revenues have grown from 1,323 crore in March 19 to 1,535 crore in March 20, then fell down to 1,198 crore in March 21. Its profits have been consistently negative and fell down from minus 59 crore in March 19 to currently at minus 81 crore. So basically there are two reasons for the losses. First reason is investment activity where the company is pumping more money into the business for growth. And second reason is high debt levels. Company has total borrowing of around 380 crore and lease liability of around 871 crore. So that's a total debt of around 1250 crore against an equity of just 71 crore. Due to that, company is paying huge amount of interest every year. In FY20, the company paid interest of around 152 crore, which is very high, and it's eating its profit. So company is consistently in losses and has a very high debt level, which is a red flag. Although the company's cash position from operating activity is consistently positive. Its cash from operation in FY21 stood at around 239 crore. So the expectation is that currently company is in growth phase and hence investing in capex. In the future, when the investment activity would reduce, there would be high cash generation from operation that would make the company profitable. Devyani International IPO date is between 4th August till 6th August. Its IPO price band is between 86 rupees to 90 rupees. Face value of each share is rupees 1. Market lot is 165 shares and minimum investment is of rupees 14,850. Issue size is of rupees 1,838 crore, out of which rupees 440 crore is fresh issue of equity and remaining 1,398 crore is offered for sale where promoters are selling their stake. So the majority of money would go in the pockets of promoters. The money raised from the IPO would be used to repay the borrowings. As far as valuation is concerned, since the company is in losses, the P model would not work. So there is no way to really know the right valuation of the company. It would be all guesswork. However, looking at the current hype around IPO, especially around the food service business, Devyani International IPO is expected to get a very good response. And the current grey market premium is expected to be around 50%. Established in 2010, Krsnaa Diagnostics is a diagnostic chain company. The company offers a wide range of diagnostic services such as imaging or radiology services like X-ray, MRI, etc., routine clinical laboratory tests, pathology and teleradiology services to private and public hospital, medical colleges and community health centers. The firm has an extensive network of diagnostic sectors across India with a key focus on non-metro and lower tier cities and towns. As of December 31, 2020, it operates around 1,801 diagnostic centers that are offering radiology and pathology services across 13 different states in India. In fiscal 20, company has served 5.27 million patients. One of the key differentiation of Krsnaa Diagnostic is the price point of its diagnostic test. Company's focus is on inclusive and affordable services, and hence it provides very competitive rates and operate at significantly lower rates than competitors. For example, as per report, its radiology tests are priced 45 to 60% lower than market rates, while pathology tests are 40 to 80% lower than the market rates. Company operates on a unique PPP model, that is public-private partnership model, where it collaborates with central, state and municipal government operated health and medical facility for deployment and operation of its diagnostic centers. It also partners with private sector hospital to establish diagnostic centers within their premises. And their focus is on providing diagnostic services to mass segment, particularly in tier 2 and tier 3 cities and towns in India. Another key strength of the company is its diversified presence in 13 states of India, where it has presence in 1800 plus locations. Company promoter is Mr. Rajen Mutha, who is the chairman of the company and has got over 10 years of experience in the field of pharmacy and diagnosis. If you look at the competitors, Krsnaa Diagnostic has strong competition from some of the well-established diagnostic chains in the country, including Dr. Lal Path Lab, Metropolis Healthcare, Thyrocare and SRL Diagnostic, etc. Its first key risk is that a substantial portion of revenue is from public health agencies, which represent around 70% of its revenue. Hence, their future success would depend upon their ability to maintain good relationship with public health agencies. Moreover, they operate in a low-cost competitive bidding environment, and their business is capital intensive. Hence, they need to ensure that they have enough working capital to continue their operations. If you look at the future growth prospect, there is an increase in lifestyle-related diseases due to lack of physical activity, work-related stress, and poor food habits. On top of that, there is a rising awareness related to regular health checkup. So more and more people are now getting aware about the importance of health checkup to ensure that they identify the disease at an early stage. Moreover, the government has a lot of focus on improving the health infrastructure of the country. Under the National Health Mission, government has launched free diagnostic services that would boost the PPP model in diagnosis. The biggest growth driver for Krsnaa Diagnostic is its focus on tier 2 and tier 3 cities along with rural area that are highly underpenetrated, where majority of small town and villages do not have diagnostic services. Krsnaa Diagnostic is aiming to cater to that area with its low-cost diagnostic services. If you look at the financials, Krsnaa Diagnostic revenue have grown from rupees 214 crore in March 19 to rupees 661 crore by March 21. So that's more than 3 times the jump in revenue in 2 years. It was initially at loss during FY19 and FY20, but in FY21, the company has reported profit of rupees 185 crore, which is great. It has debt to equity of 1, which is on the higher side. Krsnaa Diagnostic IPO date is between 4th August till 6th August. Its IPO price band is between 933 rupees to 954 rupee. Face value of each share is rupees 5. Market lot is of 15 share and minimum investment is of rupees 14,310. Issue size is of rupees 1,213 crore, out of which rupees 400 crore is fresh issue of equity and remaining 813 crore is offered for sale, where promoters are selling their stake. The money raised from the IPO would also be used to finance the cost of establishing diagnostic centers at Punjab, Karnataka, Himachal Pradesh and Maharashtra. So the company is planning to expand its diagnostic services. Remaining money would be used for repayment of debt and meet the general corporate expenses. Regarding the valuation, since the company has been profitable only in the last year, it is not possible to calculate the right valuation. However, there is a good response in the grey market to this company, and the grey market premium is expected to be around 40%. Overall, if we conclude, Devyani International is in the business of QSR chain with brands like Pizza Hut, KFC, etc. Krsnaa Diagnostic is in the business of low-cost diagnostic services like MRI, X-ray, etc. in small town and villages of India. In terms of future growth, Devyani International has a bright growth prospect as people would continue to eat fast food due to busy lifestyle, change in taste preference and preference for branded food outlets. Then Krsnaa Diagnostic also has a bright future because of diagnostic sector is highly underpenetrated in small towns and villages in India. Plus, there's an increasing health issue due to unhealthy lifestyle and bad food habits. In terms of competition, there's a strong competition to both Devyani International in the food and beverage sector and Krsnaa Diagnostic in the diagnostic sector. Although in terms of financials, Devyani International is consistently in loss with high debt levels, and Krsnaa Diagnostic has recently become profitable. But Krsnaa Diagnostic growth has been much higher as compared to Devyani International. As far as IPO is concerned, both the companies should get a good response and you can expect a good listing gain. So if you are looking for short-term listing gain, you can go for both the IPOs. In terms of long-term, I think Krsnaa Diagnostic is looking better. As far as my verdict is concerned, I am a long-term investor and between both the IPOs, I would prefer Krsnaa Diagnostic because Devyani International has very high losses and very high debt level. And Krsnaa Diagnostic is looking better in terms of financials. But please note that both companies are small cap and would be volatile in the future. So which is your preference? Which IPO are you going to apply for? Let me know in the comments. And as I mentioned before, I will share my stock portfolio on 8th August Sunday to folks who have subscribed to my weekly video course or have joined the Intelligent Investor level on Join button. So if you want to know my investment portfolio and my strategy along with a weekly video on stock market analysis, you can either enroll on my website or the Join button. For more details on new services, you can explore this video. I hope you will find this analysis useful. I will see you with another video. Till then, take care.